What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to make some updates to my M1 Finance, my E-Trade dividend portfolio, and Saturday night. So I have a big exam tomorrow, but I wanted to post this video kind of quick, show you guys some changes that I made to my dividend portfolio, my M1 Finance dividend portfolio, and E-Trade dividend portfolio. So I'm going to try to pump out 6 or more videos these next 2 weeks because I have a break for my summer semester and I really want to post some videos for you guys. You guys have sent me some really good stocks to do reviews on. I'm excited to do those for you guys. And I'm excited to show you guys my plan, my strategy with my M1 Finance dividend portfolio and E-Trade. So if you're new, make sure you hit that notification bell so you don't miss future videos after you subscribe. Smash that like button. And let's check this out right now. So here is the Death Star, my M1 Finance dividend portfolio. I'm sitting at $31,957.13. Again, my goal is to get to 100,000, go from there, and maybe go to 200,000. We'll see. But I really want to earn a lot of passive income with this fractional share dividend portfolio. A lot of strategy was put into this. A lot of changes were put into this. And look at this just grow. I mean, right here in 2020 in February, I started at $5,000 and I just started throwing money in. Look at that. 30,000. So right here, 2020 in February, I had $522 and I threw in 32,000. So I could have been partying, I could have been doing a lot of things. I decided to invest in myself. And this is what's going on. So my earned dividends right here are 2,272 and 35 cents. Market gain is up 6,000, and I did put money in when the dip happened, so that's probably why there's a high return. So I just want to go over my portfolio a little bit and show you some things that I plan on doing. So I'm going to go to the holdings real quick. So number of shares, I have Iron Mountain at 60. And what I did, I had Seagate and I had all these stocks, and I'll go over some of the changes and what I plan on doing with Iron Mountain, LTC. These two combined, I sold a lot of stocks and then just threw them in these guys. So QYLD, I have 60 shares. RYLD, I have 52. Omega Health Investors, I have 42. British American Tobacco, I have 41. Kinder Morgan, I have 39. Altria, I have 34. Capital Southwest, I have 31. Verizon, I have 28. VC, 26. BGS, 25. XYLD, 25. Pfizer, 24. Medical Properties, 23. NRZ, 23. Enbridge, 21. Spirit Realty Capital, 21. And Arbor Realty Trust. Whoa, guess what? I just added them to my M1 Finance dividend portfolio as well. So I'm earning very good passive income with them on here, and I'm also earning passive income with them on my E-Trade dividend portfolio. Pembina, I have 20.25 shares. Pine, Nusi, 19.95. CareTrust, 19.59. AF GC Gamma, that's that mortgage-backed real estate investment trust that's with the Mary Jane. I did post some videos on them. I really like these guys. I can't wait to get to like 200 shares and see what I can do with them because they're a new kid on the block. Acre, PennyMac Mortgage Trust, Devo 14, TELUS. So I got the communication stock right here. Coca-Cola at 13, UEV 13. Percentage wise, I'll show you what I did. MPLX, the dividends are really starting to buy these guys. TSLX, One Oak, Healthcare, JEPI, I have 8. ADC, Agree Realty Corporation, BCE, I have 6. SLG, I have 6. And then Zim, I added Zim. Look at this dip right here. I sold IBM and just put it in Zim, kind of as an experiment to see what I can do. So let's go to the portfolio real quick. And if you follow me on my Instagram, I usually post, or my Twitter, the dividends that I earn. This real estate sector BDC, eventually I'm going to get the percentage a lot higher. I just have Iron Mountain and LTC, like I was just telling you guys. The communication sector right now, I have Verizon. I got rid of AT&T, and Zim really isn't a communication stock. I just threw it in there, see what I can do, and get some distribution. So BCE and TELUS, These two, I want to get to at least 200 shares. I have a high percentage on this, have it at right around 10. So I want my dividends to get in there. And my super REIT, I have Medical Properties Trust, Pine, Arbor Realty Trust, Care Trust, AFCG Gamma, Acre, and Healthcare Trust of America. So this is kind of my heavy hitter one with my high yield dividends. And Altria, right here, I have at 6. British American Tobacco, I have at 6. This monthly dividends ETFs, JEPI, NUSI, and Devo. I was hoping that M1 Finance would add XYLG and QYLG because I was going to add them to this with this monthly dividend section, but they said no, there wasn't enough traffic, and I got QYLD, RYLD, and XYLD right here. Omega Health Investors, I have it 5%. Pfizer, I threw it to 1. Eventually, I'm going to jump it up. Once I get to 200, I'm going to go to 4% and 3% with Omega. So then I'm going to start changing the distribution. So these guys will start getting a little bit more attention. Spirit Realty Capital, I really like these guys as a real estate investment trust, a 5.40% dividend yield. I have posted videos on these guys. Coca-Cola, the same thing. The percentage is going to get, once I start getting more conservative with my dividend stocks, the defense stocks, my percentage is going to shift a little bit more towards those guys. And again, 200 shares, I need UVV, it's smoking, get the joke. Pembina right there, that's another one. VC, I need to get these guys. Kinder Morgan, I'm going to change the percentage and get them back up there. BGS, same thing. I got a lot of shares in these guys. So then I'm going to start shifting things. And then once QYLD, RYLD, and XYLD start really racking up, I want to get to at least $100 a month in QYLD, RYLD, and XYLD. Then I'll start changing the distribution so that I can get Agree Realty Corporation to start distributing the monthly dividends because I see them as a rival to Realty Income. And MPLX is another one. I posted a video on these guys. Again, you get the K1s with these guys. I have a percentage right there, and let me just jump back to that. 7.95% dividend yield. You saw the dividend hikes I had, and really this is what the activity is. These guys will be buying MPLX. And again, what I'm starting to do is throw $110 a week now. So I'm going to start getting a little bit more focused on these guys. And I got to the point where I can buy a fractional share here, but then I can start buying more shares of these guys, and then it'll start distributing things. So, QYLD, RYLD, and XYLD, I'm gonna start backing off of those guys eventually, and then just getting a higher percentage of my dividend stocks because I'm getting hikes. And if you watch my previous videos on QYLD, RYLD, and XYLD versus XYLG and QYLG, those XYLG and QYLG, they're going to increase their dividends over time. Again, this is not financial advice for entertainment purposes, only disclaimer in the description, but eventually their dividends, their growth, and their covered call is going to overpower QYLD, RYLD, and XYLD in the long run. So it's a good long-term dividend growth ETF because it's going to increase, it's probably going to increase price per share and increase its dividends. So now I'm saying to myself, ooh, could I have those guys in a Roth IRA? Because then, I don't have to report, with the taxes and the increase in price per share over time. Because anytime you want a Roth IRA, you want stocks that increase in price per share over time and increase their dividends and keep up with the S&P. If you can get those three things, you're rolling. Like VTI. VTI increases their dividend over time. Their price per share goes up. And I have seen in the past that some ETFs have stock splits in the past. So that would be very exciting if Vanguard did that. And I wouldn't be surprised if they have, if they do a stock split with VTI in the future. So now let's jump to the E-Trade dividend portfolio. So right here, it's $36,000 is my portfolio. And I lost 480. Big freaking deal. Again, I'm a dividend investor. It's not a big deal. I mean, if you look at the performance right here, like how I'm doing against the S&P, okay, individual, well, I'm actually beating the S&P and NASDAQ and Dow. So great, but big deal because I want my dividend stocks to Price per share wise, I want them to kind of stay stagnant and then just increase their dividends over time. So, looking at some of these, if you look at price wise right here, WPC carry, I have 22 shares. Eventually, I'm going to need more because 22 is not going to cut it. Now, sure, if I can buy a new share each at the end of the year, but 22 is not a lot. No, and there's a lot of potential with those guys. Realty income, I'm at 100 shares, and literally, I'm starting to buy more shares with the compound interest and just leaving it for now. But I need to get that up. EPR properties, I have 71 shares. I'm hoping I can get to 100. Maybe the next year and a half, once I start travel nursing. EPR properties also just increase its dividend. NHI, that's another one. I only have 27 shares. That's not going to do anything. Main Street Capital, I'm almost at 100. Stag, I'm at 57. Conagra Brands, 32 shares. That's not a lot. I mean, the more, the better. In store, I'm almost at 100. I need to get to about 200 and then just leave them alone. Same with Franklin Resources. They're cheap. They have really good dividend hikes, and they're in demand. And they're a company that's in demand. KeyBank, I only have 47 shares. So now you're seeing where I'm going. Like, if I can get to 200, I'll show you my estimated income. But I've been loading up on a lot of these bank stocks. Arbor Realty Trust, I'm at 122 shares. I'll get to 200 here and just never touch it again. Just reinvest the dividends and see what I can do. Gain, I'm at 172 shares. Huntington Bank shares, 51. Again, I need to get to 200. VTRS, almost every 2 weeks I've been buying 10 shares. So once I get to 200, I'm going to leave those guys alone. Sachem Capital Group, that's almost, I think terminology wise, that's a penny stock right now. Anything that's less than $5 is a penny stock. And, that's one that I've been loading up on, and some decent dividends from those guys. I mean, I wouldn't put all my eggs in one basket. And then SQFT Presidio Property Trust, that's another one that basically is, this is a real estate investment trust that started when pandemic hit. And it's like, what are you going to do? you really, it's a lose-lose situation. So I loaded up on them. And same with the IVR. That one's a big risk. It's a mortgage-backed real estate investment trust that took a huge hit during the pandemic. And it's going to take a long time for those guys to recover. So don't expect that to happen overnight. And then I think this thing broke off somehow from them. I need to talk to E-Trade. I'll probably talk to them this week. I got like some money from dividends or something. I thought it was really weird. And I wonder if it's from those guys or what's going on. So that's kind of the updates, my dividend portfolio. And my estimated income right now, looking at it right now, is $2,035. So I reached the $2,000 mark. It's obviously, this is chump change compared to a lot of people who were very successful dividend investors, but it's going to take time. And, me being single, being in graduate school, I'm kind of on a tight budget. I will pick up shifts in between my breaks, or I think with my hospital system being bought off by a bigger hospital system, the shift differentials kicking in for weekends, because I work every other weekend on day shift. It helps. It helps. For one, my 403b, which is completely 100% in the Vanguard total stock market, and I can throw more money in my dividend portfolio in crypto. So that's kind of the progress that's been going on. I cracked the $200 mark, which is good. Eventually, I'll be consistently at $200. And look, I'm just putting money there and leaving it there. I know a lot of people make a lot of money for options trading, but I don't got time for that. I don't got money for it. I don't have the patience for it. So that's kind of how things are going. So, I beat the $100 mark, which is good. I'm very excited for that. And just look at these guys, the estimated income coming in with these guys. That's what's pretty exciting. with this dividend portfolio, and it's just going to get bigger. It's going to get more exciting, and yeah, I mean that's basically it. I loaded up on these guys. We'll see what happens with IVR in the long run, but if I can get to 200 quarterly with those guys, that would be amazing. But gonna leave them alone, take the risk there, and go from there. And I think the money that I'm gonna get back from rich uncles, I might throw it in Huntington Bank shares, and then just start focusing on HTBK or another one. And let's see what the distribution is. 15 cents. So if I get to 200, I mean, be able to buy a lot of shares of Huntington Bank shares and just leave them alone. So that's about it. Let me know what you think of this video. If you guys are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Darth Dividend. You guys have a great Sunday.